Morning, Steve Freed in Chicago with the morning grain comments. It's weekly U.S. export sales report today. We're also debating on whether or not prices should go higher from here. We're getting into some nosebleed areas as far as some of the technical signals, but certainly the chart action supports maybe a little bit higher trade. Overnight, we've got beans up 4 cents, corn up a penny, and wheat about unchanged. So we're at 9.85 on the November beans. The next resistance is 9.94. In the corn, we're near 351. Again, the resistance is at around 360, and wheat's around 420. And so we'll see if we can kind of push things higher on some of this chart buying. But it's interesting in that when you look at the cash, corn basis at the Gulf's a little weaker. Domestic, though, it's firm. As the harvest nears an end, you're seeing both the processor and the feeder beginning to bid up for corn. And in the beans, the export basis found a bid yesterday on some talk that China may have come in and bought a couple of U.S. cargoes and maybe 3 cargoes out of Brazil. It's interesting to note that in China, there's a lot of news coming out of China. First of all, their crush margins are higher, and their soybean meal prices are the highest since October of 2014. So that could help on the demand side of things. China also announced yesterday that they're going to stop buying corn out of the reserve, and that they're going to try to subsidize domestic users of corn. This is trying to build the price of corn up domestically, which is below farmers' costs. They also announced that they will work on increasing grain production between now and 2020. They also will reduce corn acres and increase soybean acres. On the canola side of things, their auction prices got to be the highest since 2015, and when we look at the Canada crop, it continues to cause higher prices, especially in Europe, but now also in China. I'm concerned about the Canada's crop size. So a lot of news out of China. As far as export sales is concerned, we're expecting about 400,000 tons of wheat versus 491 last week. Maybe somewhere around 800,000 tons of corn versus 873, but we're noting that on the corn side, there's all of a sudden a slowdown in new business. And in the soybean export sales, somewhere a little over 1 million tons. Last week it was 1.4 million tons. We are watching to see if some more announcements will be made because of the contract sales that were done last week. So it is interesting that one farm advisor came out telling farmers to increase their soybean 2016 sales. They're now up to 80%, and also do 30% for 17, which is the first sales of this season. In corn, they're willing to increase sales for 16 corn around 372 on the March, selling 15% of 17 on 398 on the December, and making their first sale for 2018 corn around the 414 area on December 18 corn. So at least their bias is that we're getting close to a top in prices for a while. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.